The market holds support and pushes higher. Was it the bears who got trapped? This is Invest with Jacob. Okay, guys, so in our primary path yesterday, we were looking for the bulls to hold support and the market to push higher, and that's exactly what we saw. Even though they sold off a bit in the overnights, the market held support and pushed higher throughout the day, closing above Friday's high. Now the question is, are the bears trapped? I'll get into that in just one second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the market pushing higher, it does put pressure back on the bears. So let's jump into the chart and take a look. Okay, guys, so here we are on the 1 hour futures chart for the S&P 500. And after that move up on Friday here, remember we're counting this as a truncated fifth for the all of wave 4. After that, you had your wave 1 up, wave 2 pullback, and now we are at kind of where you would expect wave 1 of 3 to hold and pull back a little bit. Now, if they don't do that, it can be a little bit bearish, and I'll tell you why in just a minute. But what we would expect to happen is a wave 2 of 3 that holds this low right here at about 4,300. It's actually a little below that, but we would want to hold that low, and then we'd look for the next move higher up to the 44 area. And this would be a strong sign that the bulls have held the low, that they are reversing, and they have taken out the bear pivot and trying to push higher to the 4,800 area. We would still, of course, want to see them pull back in 4 and come back up in 5 to complete the move. But overall, this is the expectation that you would look for from the bulls. Now, I did say that if they move directly higher, that could be somewhat bearish. And the reason for that is if you have an ABC structure, so let's say we're counting this as ABC. If you have an ABC structure as opposed to an impulsive structure, one of the main differences is you don't get a wave 1 and 2 set up in the C wave that is as solid as it is in wave 3. You might get a quick 1-2, but many times when the market moves directly up and disregards the 382, the 0.5, the 618, and the 764 on its way to the 1.0, that is much more likely a C wave than it is a wave 3. So just to kind of show that in pictures, the line that we have that's straight up right here would be more indicative of how a C wave looks. You might get a little spike down here and then up, but mostly this is kind of how you're going to look to see a C wave finish because it has no intermediate structure that you'd be looking for a bigger move. For a bigger move here, we'd want them to come up in 1 and then pull back in 2 and have a decent pullback that comes, at least to the 50% 618 of this wave and then up. Does that mean this can't be a wave 3? No, it means that it's less likely and much more commonly a C wave. So when we don't see the 1-2 setup, you have to be cautious that the 1.0 is going to be the target, and they're not going to be able to push through the 1-2 to the 1-2-3-6, which is where you would expect them to get to. So that is the primary path. We are looking for a little bit of a pullback before higher up toward that 44 area, which would be very bullish overall. For the bears, they have a few different things they can look for. The first thing would be that off of the low we are in an ABC, right? So ABC up a little higher into the pivot, and then we start to look down in that next wave, down in wave 5 of 3. That would take us down toward the 41.40 area. If you come down, you'd be looking for the 618 fib. Here, the 618 fib at 41.38. So you'd be looking for that kind of move there. And a break of this wave 2 low should be a warning to the bulls that we are failing the up move and coming back down to test this area. And I think the third test would break through, and that would be another warning for the bulls because they'd be on alert to break 4170 on the SPX, which I've been talking about for a couple weeks now. So that would be the initial thought of what the bears can do. The other path that the bears have is a diagonal path, and that's not unreasonable. If you've been following the channel, you know that my original hypothesis 1 year ago was that we'd be coming up off of 3,500 to 4,300 plus and then looking for a C wave down. That was my original hypothesis. We started to move down here, and we only got 3 waves in my opinion. I think it's a pretty clear 3-wave structure to the downside here. And when you have a 3-wave structure, then you have to start talking about the option of a diagonal if that's what's going to play out. Now, diagonals are not trustworthy. They're not something I put a lot of stock in, but that is something that can happen when you have 3-wave structures. So the reason I pivoted when we got up here to the high and we came back in 3 waves is because for a C wave down, you would expect a 5-wave structure. So Is it possible that this is 5 waves? It is, but it's a really ugly 5 waves, and wave 5, in my opinion, is much too long for that to be the case. So I would be looking more for this to be a 3-wave structure and a bigger A, B, C down like we've been talking about, and then the bulls to rally back up. However, if it is going to be a diagonal, this would be the secondary bear path where you have 1 down, 2 up, 3 down, and then you'd be looking for wave 4 up. And that wave 4 should get into wave 1 territory, which is right here at 4,400 or so. So they come back up into wave 4 territory, which would break the pivot, which is very common in a diagonal. That's why the pivot is so important. Come back up into wave 1 territory and then collapse down in a wave 5. And that wave 5 would target the 1764 area, which is 4096. So we'd be looking for this kind of move here and a leading diagonal off the top for a 5-wave structure. And that would be our wave 1 of wave C to get us started to the downside. So the bears have 2 paths that they can follow. If it does go higher, we would be looking at that diagonal to play out. And essentially what would happen in that case is you'd get more of a direct move up into here, and then you'd get a really sharp sell-off down into this 4096 area. And what happens when diagonals complete? If you've been watching this channel, you should know they rally strongly back toward the origination point. So we could see a very strong rally back towards this 4600 area. 4550, 4600 area, and then start wave 3 of C to the downside. So this would be an epic bull trap here, coming back up, having everybody on board for the all-time highs, and then dropping the bottom out. So the diagonal is still on the table. Keep that in mind if they do go higher, that the bulls are not out of the woods until we see a strong 5-wave structure up. And we don't have the best bottom down here. That's another reason I would entertain the diagonal. This bottom is not very good. We did not get the 5th wave lower. We have a truncated 5th. Those can be very sloppy and hard to rely on as well. So this is not a place where I'm overly aggressive in either direction for long-term trading. I am mostly reinvested in my 401k down here so that we can catch this move up. We should get a decent move up either way. And if they do come back down and it looks like the bulls are going to fail, we can get back out of our 401k about even. And that's our strategy. Get in near the bottoms, get out near the tops, and dodge these big dips so that you don't have a 10% crush on your 401k. So anyway, those are the types of trades I'm looking for right now. Things that are longer term, where I'm trying to say, okay, I dodged all of this move down. It's safe to get back in here. And now I got a really good exit plan. If they do fail and come back down, I know that I can get out at even or maybe a little bit less if I let it come down to 4170 SPX and not take the entire hit on the move down, just take the little hit here. So that's what we were looking at for that plan. And those would be the 2 paths overall, the bullish path directly higher here, and the 2 bearish paths can play out a little bit differently. Over on the NASDAQ. Okay, on the NASDAQ, we have a much sloppier structure. It's not as clean as it is on the ES, not exactly what you want to see down here when you're trying to get a bottom, but it's not unthinkable to say that the NASDAQ has a 1, 2, 1, 2 setup. They broke out. Yesterday I told you that once they hit the 1.0, they need to hold the 618, which they did. And then they should push to the 382, 2618 extension from here. So they'd be looking to push up over 15,312 or so on this next move, as high as 15,424. And if, obviously they can continue to push, but those would be the 2 targets that we would expect for them to get to if they're going to play out this bullish path. And then we would look for a pullback toward the 1.0 and then up toward the 1782 here to the 2.0 at 15,500 to 15,600. We would look for one of these 2 levels to hit. And if we see that, this would be a pretty bullish structure overall for the NASDAQ, giving us over this high or over this consolidation resistance over here. It would have taken out those lows. It would have also retraced quite a bit of that move down and get us back into that 15.6 area. And then we would need to see one more thing to give us a strong confirmation, and that would be a 3-wave move to the downside and a move back up that takes out this high. So that would be what the NASDAQ is looking for to the upside. Overall, the NASDAQ is either playing out a large diagonal to the downside, which would be a wave 1 of C, or we're going to see this bullish count play out. The diagonal essentially would be, because they did not hit the 1.0 here, not even close. They didn't even get down to the 4.0. I'm sorry, the 1.0 or the 14,400 area. What they would have to do here is you would have 1, 2, and this would be A, B, and then you'd look for C of 3, C of 3 down to this area, and then you'd look for an ABC back up into wave 1 territory, and then the final move down that would target this. These would be the targets, 13,856, and then you would target the 13,514 to 13,276 area, and this would be wave 1 of C on the NASDAQ. So the NASDAQ, because of its ugly structure, because it didn't extend here to get down to the 1.0, which we would expect at 14,411, because none of that has happened, it's either going to play out in a diagonal form to the downside, or the bulls are going to take control of the market here and take us higher. And we always give the benefit of the doubt to the non-diagonal structure, because diagonals are very difficult to track and very unreliable, and we need to see them kind of prove themselves overall. But if the diagonal plays out, they will take out the 14,128 area, which is the key level for the bears to break, to give the bulls, put the bulls on the sideline for a while, and that diagonal would do that. So you'd be looking at A, B, C down, and then a move up, and then a bigger move down overall. So that's where we'd be on the NASDAQ, the two basic paths, the direct move higher, okay, that would take us back to 15.5, 15.6 area, or this ABC where we get up a little bit higher. I mean, they can come up here like this and then come down, but we'd be looking for this B wave to conclude, and then this diagonal to finish out to the bottom side. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans that both come with a 7-day free trial, because I want you to get in there. I want you to make sure you love it and become part of the trading team before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners course. This course is helping real people make real money and finally understand the stock market in a way that makes sense. It's really difficult to follow the news cycles and understand why bad news makes the market go up and good news makes the market go down. With Elliott Wave, you know the key levels, you understand where it should be and what you're looking for, and when they break, what happens. This allows you to understand the market in a way that's tradable. It is 25 videos where I go through 3 different parts. First is the introduction, where we go through your expectations, your mindset and emotion, the KISS method and why it works. Second is your chart setup and tools. You have all the tools you need with Elliott Wave so that you can set up your chart and understand when you're seeing confirmations, and use the tools to make sure your Elliott Waves are reacting properly. And then finally, we have our Elliott Wave for Beginners area. This is the area where I go through each wave, what its targets are, what its failure points are, what they're supposed to look like, show you in real time on the chart how they look and how to measure them and how to find them, as well as go through corrective depth theory, the theory of alternation, the pivot, all the different things you need to know to understand the market in a way that would make sense. The really cool part of the program is it is included in both monthly rooms. So if you don't want to pay for the course, you can become a monthly member, and the course is included for free. In our first room, the Invest with Jacob room, you get all my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you need in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trades that's so unique. It's something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where you put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, key takeaways for today. For the bulls, it's pretty straightforward. They need to pull back a little here, give us a wave 2 of 3 and then a 3 of 3 breakout up toward the 44.40 area, which would break through the pivot and put the bears on alert that the bulls are trying to take control of the market. For the bears, they can hold here at 43.80 and push directly lower towards the 41.38 area in wave 5 of 3. Or we could see a diagonal play out. Remember, we did have 3 waves off of the top. And if that's going to be the case and they still want to go lower, it's going to have to be a diagonal form. So we would see a move up here and then see wave 5 down toward the 40.96 area. Over on the NASDAQ, essentially looking at 2 different paths. The direct move higher for the bulls here in a breakout type of situation where they move up to the 15.312 to 15.424 area. Look for a pullback from there, and then another high towards the 15.5, 15.6 area to give us a wave 1 up. Or we could be looking at a diagonal to the downside where we are in wave B, of a bigger wave 3 down. You get C of 3, then you get your wave 4 up, and then 5 down from there. Guys, that is your market update for today. I will talk to you tomorrow.